Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, May 1st, 2009. Well, we're seeing what we call kind of a slow day on Wall Street, very slow, sluggish, if you will. Light volume really ruling the roost right now as the market's kind of floating higher on light volume. And what you can see here is initially we opened the markets to the downside or right around the flat line and then started to sell. And that was really the only amount of volume we had in this day. And you can see that totally on my chart. Notice the candles right here, the red candles, this big red candle on the sell candle right here as well. And that's telling you that there is selling volume out there, but when the volume dries up and is non-existent, this market is going to float up. And that's just generally what you see. Remember, Fridays are notorious, especially over the last 2 months, of floating higher because light volume comes in. Sentiment right now is in a bullish phase, and that's going to keep the markets afloat. Now, the interesting thing about it is you can see the market's kind of consolidating for now. You're hitting on some major resistance areas right here. Notice the couple trend lines. I have a blue trend line crossing to the upside here, a purple trend line across, and the 50 moving average. All are coming to this point right here at approximately, let me get a quote on that, at approximately $87.70 on the spiders. So that 87.60 to 87.70 is a big level. If you do take that out this afternoon, you could be up for a little bit of a move up in this market. However, if you do not take that out, maybe the markets later in the day when volume comes in, maybe 3 o'clock volume does push this market lower. We'll have to kind of just continue to watch and analyze this market and the charts. But right now, as you can see, the opening was basically flat to slightly lower. We sold off initially for 2 candles, got a small 10 o'clock bounce. Then again, right to the 20 moving average in the blue trend line, started to sell again. That took us to the key level of the day. Now, the key level of the day really is notorious because it's the 200 in this case, the 200 moving average, and across of my beige trend line. Now, this beige trend line right here is a major level. We talked about it in the chat room today. We've talked about it in the research center in the previous couple night videos, talking about how that could be where the market ultimately is headed. Sure enough, that's exactly where it hit today. In fact, it closed right on that line. Then the next couple candles started the rally. And that's oftentimes what we refer to. We refer to key moving averages, key trend line crosses, especially neckties, where you have a key trend line analysis line that crosses a moving average like the 200. First hit in a matter of, days, multiple days, which is a big deal. And at that point, generally you'll see a good bounce in the market. And it was a great bounce. I mean, really 1, 2, 3, 4, 5, 6 candles up, then a little bit of a mini topping tail here, and then you saw a little bit of a pullback into the 20. At this point now becoming into a little area, and I just want to draw this line. I'm adding in this yellow line. Why? Because you can see you're really range bound right now. Ever since let's see the time frame on this, ever since 11 o'clock, when this green candle went up, you've really been in a sideways up and down channel, trading back and forth in every which way, and you can see that perfectly, up, down, back and forth. Now the question is, which way does this market break out later today? Now, this morning we got some odds and ends. You got a little economic news this morning, but really no big deal. Yesterday, we saw a nice fade all day long, ever since a morning push into about the 10:30, 11 o'clock time frame. The market's faded the rest of the day. We actually closed below some key levels in this market. Today, we're pushing right into those levels again, as you can see, according to our trend lines right here. Now, keep watch, guys, because again, as I mentioned, if this market does happen to break above this 87.60, 87.70 level, you could actually be in for a nice little afternoon rally in this market to the upside. And again, as I repeat, if you don't break down coming into the 3 o'clock time frame, we'll see if we start to sell down, maybe possibly take out the lows. The one thing to always remember on Fridays when you have no volume in this market, and look at these intraday candles, no volume in this market, that can be a very positive thing for the market based on psychology, and that's pure trading psychology and market psychology at work right now, why we started to lift off. And again, I want to point that out. Notice how the selling happened on the heaviest volume in the morning, and then as soon as volume started to light, what happens to the market? It starts to float higher. And again, that can be looked, you can look at oil. Oil's a big contributor today. Let's go to the USO chart quickly. You can see how oil, this is the USO chart, which is the ETF for crude oil, and you can see it's really just ripped higher all day long. You've had a little bit of a pullback, but now it's starting to inch up. That spot crude will close at 2:30 p.m. Eastern time, but again, if it moves up, the market generally moves up. And why is that? Because the whole idea here is when oil goes up, a lot of these oil stocks like Chevron, like ExxonMobil will get a bounce. BTU's having a big day today. All of those will rally to the upside and push up when oil goes up. When oil comes down, they push down. Now, a lot of those companies are big components of the S&P or even some of the other indexes, the Dow and so forth. So obviously, when oil rallies and those stocks move up, the market will react also. Now, the other component of what the market's really run on lately is financials. Goldman Sachs actually had a key gap fill today, right up into gap fill resistance, and I'll show you. And then since then, it started to roll over a little, which is very, very interesting. But you can see initially Goldman was very strong, and then oil really took over. So Goldman lifted the market early, and then oil started to lift the market later in the day when Goldman started to come down here as we're approaching the 1 p.m. Eastern time frame. And you can see Goldman actually selling slightly here after a nice green up candle. All right, so we'll keep an eye on that. Goldman's really flat on the day, though. The markets are virtually flat. I'll just give you the indexes, what they're doing right now. Dow's down 2 points, Nasdaq's up a point, and the S&P's up about a point as well. So really on the flat line. That's where we closed yesterday. Those of you that saw the indexes yesterday, really basically on the flat line across the board are mixed. Now, let's talk a little bit about that gap fill. I want to just show you that quickly. If you see this high print right here, and I want to just take that line and just draw it right across, and we'll extend it even more, but let me get it as straight as possible. If you take this line, see this is the high print from today, and extend it all the way back here, see this big gap right here? All right, let's extend that a little more. Look at that, perfect. Right into gap fill. This whole gap got filled. That's why you had that resistance line on Goldman right around that 130, 130.50 level on Goldman for perfect gap fill on the 10-minute and on the 60-minute showing up here. But again, just notice that. Notice how Goldman reacted, went right into it. What happens? A sell-off. So again, if you can find these different patterns on various charts of yours, whether it's, XYZ or ABC, doesn't really matter. The whole idea is the technicals will teach you, the technicals will guide you. If you know what to do there, and in that instant, you can be short Goldman Sachs and see it pull back beautifully. Now again, just a reminder, folks, the Research Center, one of our best services out there. We offer 5 different services under that. The nightly video is 30 minutes long of hardcore technical analysis on the markets, on the oil front, on the dollar, and on gold, and various stocks as well. Daily market reports included, pro trader watch list is included, all that stuff on the Research Center. So we hope that you all check it out for those of you that are watching these videos. In addition, the chat room is always a pleasure to do. We have a great time in that chat room. Great calls, great call in the SDS and buying shorts yesterday at the highs on the market based off of some key levels that we talked about in the chat room. So we hope you come and join us. In addition, next Saturday, a week from this Saturday, is the next webinar methodology series, which we're going to be going over with all those that are going to be, in that webinar, all how to calculate all your key levels. How are we calculating our levels? How have we been so accurate over the last 2 to 3 years since the company's been in existence in calling every major and minor move in this market? So check that out on our website as well. All right, just going back to the spiders, guys, let's take another look here. I want to just look here, and you can see the market's still stalling. No volume in this market right now. The 50 moving average and the blue trend line and the purple trend line all triple necktying there. That's resistance, and as I said, if you can't break it, you may look for a sell-off later today. If you do break it, watch out, because this market could really go to the upside once that clears. I don't really have a significant resistance level after that point until the pivot from yesterday right here on the chart at right around 88. If we got through there, 88 would be some resistance. If it got through that, then you'd be looking at around 80, 88.30, 88.35 as your next resistance. But right now, just see how many levels are crossing right here. That's telling you major resistance. Your support line remains, guys. You have that channel that you're having right now. Your support line would really be your 20 moving average here, right around 87.30 or so on the downside. All right, that's all for today, folks. Take care. Hope you all have a wonderful weekend. Look for the weekend video. We'll put it out on Saturday as always, and we hope to see you in our services soon. Take care.